The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. S&P 500 now down 110 points. The 10-year Treasury up 18 basis points. That's a massive move when you're talking about the 10-year Treasury. We don't see, usually we're talking 2, 3, 4, 5 basis points. This is 18 basis point improvement in the 10-year Treasury, which is translating into an 87-point loss, 87 basis points lost in the 30-year in the mortgage-backed securities. Now, remember I tell you this all the time because you know, you can go and get information. You know, Chris, you'll love this one. Information, advice costs a quarter, just hypothetically. Good advice, 50 cents, right? So here's the issue. Back on Thursday, Freddie Mac came out with this. They said the mortgage rate's 5.23%. You had to pay 8/10 to get it. 5.23. Freddie Mac, that's their number, their mortgage market survey. What's reality? Well, if you look at OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. So what did rates lock at on June 10th? 5.661, not 5.23 that Freddie Mac said the day before. 5.661 is where the rate's actually locked at. 30-year jumbo, 5.185. FHA, 5.486. The best loan on the market. For our heroes, that's the 30-year VA loan, 5.22%. And if you can find one, a USDA loan is at 5.376. You can find the loan. It's just hard to find the property. Why? Why is all of this happening? Well, we've told you right along. All about Bidenflation. Yeah, that's the problem. I know it's not. No, it's not Putin. It's Biden. His policies create the issues that we're having to deal with right now. Federal Reserve last year should have started hiking rates. But as I've told you before, what do all politicians want? And I know that the Federal Reserve is not supposed to be politicians, but not one of them is. Well, two of them have held a job. Only two out of all the Fed presidents have held a job other than at the Federal Reserve. So here's the bottom line. What do they want? They want to keep their jobs. That's what all the politicians want. How does Jerome Powell keep his job? He keeps the interest rates low. What happens when the interest rates were low last year when they should have been raised? Well, we pay the price right now. Can you say gasoline, boys and girls? Oh, we didn't even look at gasoline in the last segment. Yeah, we could talk about that one. 5.014 was a gallon of gasoline, not in California because we're at 6.436. So think about some of those numbers. That's what's going on. So we're talking about inflation. The Federal Reserve did not increase the interest rates like they should have. They did not start reducing their balance sheet like they should have. Now they're saying on Wednesday they'll increase the Fed funds rate by 50 basis points. Yeah, they might need to go 75 or 100. We'll see. National personal savings rate, which soared during the early months of the pandemic, has now fallen back to below its pre-pandemic levels. The rate was 7.8% in January 2020, went to 33.8 April 2020, now dropped back to 4.4% in April 2022. So these are just the most recent numbers that we have. Again, the housing market, though, 38% of the homes are owned free and clear. And I've shared with you.
Is that U.S.?
Yeah, 38%. U.S. 38%. And I've shared with you that home equity is high risk. That's about the highest risk investment you can have. Why? Because as a lender, we do not lend money to anybody that needs money. We lend money to people that want money. If you're in need, get hit by a bus, have some sort of a health issue, right? Ozzy Osbourne, he's not getting a new loan today. I can guarantee it. Well, there may be issues. But the bottom line is if you have a health issue and you need to access that money, you can't get it. If the housing values drop, you can't get it. Take the money out strategically. Right now, home values are still increasing. Get the money out, put it in a safe, secure investment. We can talk to you about that. And I'm just sharing that with you. It's better. It'll save you in the long run. Nobody that had a 95, well, I shouldn't say nobody. Those that had 95% of the money pulled out of their homes in 2008, right? They might have gone upside down, but the bottom line is they had already pulled the money out. They had that money secure somewhere else. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990.